Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Tata Motors. Our analyst maintains buy on Tata Motors with upward revised target price of Rs 748 on robust operating performance in Q1 and in expectation of continued improvement in JLR, passenger vehicles and consumer vehicle business along with reduction in net automotive debt from current levels. JLR reported robust EBITDA margin at 16.3% with a free cash flow of 451 million GBP in Q1 of FY24, guided for a steady demand outlook supported by order book of 185,000 units. Despite 26% quarter-on-quarter decline in volumes, consumer vehicle business reported EBITDA margin at 9.4% in Q1 of FY24 against 10.1% in Q4 of FY23. Net automotive debt came down from Rs 43,700 crore in Q4 to Rs 41,700 crore in Q1 of FY24. The stock trades at EV by EBITDA multiple of 5.5 times FY25 earning estimates. Next on radar is Larsen and Toubro. Our analyst reiterates buy on L&T as it reported stellar Q1 FY24 results. Its revenue grew by 33.6% and net profit grew by 46% year-on-year, while operating profit margin missed estimate as infrastructure margin fell on year-on-year basis. Order prospect for the remaining 9 months are up by 34% year-on-year at Rs 10 trillion. Order inflow for Q1 FY24 was robust at Rs 65,520 crore, which is plus 57% up year-on-year. Order book continues stands at an all-time high of Rs 4.1 lakh crore, which is 2.1 times trailing 12 months revenue. L&T maintains guidance of 12 to 15% and 10 to 12% order intake growth in FY24. Share buyback at Rs 3,000 per share up to Rs 10,000 crore comprises 2.4% of total equity. Upward revision in target price factors in strong execution, margin tailwinds in the medium term and increase in valuation of its subsidiaries. Last we covered Jyothy Labs. Our analyst retains buy rating on Jyothy Labs with a revised price target of Rs 340. Jyothy Labs Q1 FY24 performance beat our as well as the street expectation, with revenue growing at 15% and PAT growing at 101% year-on-year respectively. Operating profit margin rose 707 bps year-on-year to 17%. Domestic household insecticide business got back in double-digit growth, led by seasonal effect and emphasis on wider distribution. Focus remains on improving volume growth, improve market share in key categories, widening distribution reach, and enhancing digitization to achieve double-digit revenue growth in the medium to long term. Jyothy Labs maintain target of achieving of operating profit margin of 15 to 16% in FY24. Despite a strong run-up post the result, the stock trades at 32.9 times its FY24 estimates and 27.5 times its FY25 estimated EPS, which is a discount to mid to large peers. For more detailed disclosures and disclaimers, please refer to our research report or contact our nearest branch. Please read the risk disclosure document issued by SEBI and relevant exchanges and terms and conditions on sharekhan.com before investing.
Thank you for watching. To keep up with the latest from Sharekhan, make sure you subscribe to our channel. You can also download the Sharekhan app for all your trading and investing needs. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.